Welcome to the Commercial Real Estate Show, your source for insightful analysis and enlightening discussions. I'm Michael Bull, your host to the world of commercial real estate. Thanks for joining us. You might be in one of the 40 radio stations around the country. You might be listening on iTunes. You might be watching the show on YouTube, or you might be catching us at the show website, commercialrealestateshow.com. Thanks for being with us. Well, today we're going to talk about single-tenant net lease investment properties. This has been a very hot sector, and for a lot of good reasons. Also, we may have some changes in the single-tenant net lease market because of interest rates creeping up in 2015. We've got a panel of experts to talk to today about the single-tenant net lease property, what's going on, and what to expect moving forward. Please welcome my first guest. It's Nancy Miller. Nancy is Senior VP with the National Net Lease Investment Group at Bull Realty. Nancy, thanks for joining us today.
Thanks for having me, Michael.
Well, we appreciate it. And Nancy, I know you've been in the single-tenant net lease market for a very long time. You've got a team that's tracking this market and selling these properties pretty much all over the country. Now, our audience is very sophisticated commercial real estate people around the country. So there may be a lot of listeners that know absolutely what single-tenant net lease properties are. We may have some investors who are looking at buying their first properties. So if you will, briefly tell us, what is the definition of a single-tenant net lease property, and why is the sector so popular?
Well, it's basically a single tenant or a single. No, you have no competition. No one else is in your structure. It's one structure. You're going to have a long-term lease with probably a national credit tenant who has a corporate guarantee. You're going to have a piece of land that is part of that structure, and you're going to enjoy it because it's very simple and it's easy cash flow, long-term cash flow.
And it's net leased, right?
And it's net lease, so you as a landlord basically are going to be doing nothing except collecting the rent. We call that mailbox money, so hence everybody likes that.
Right. Okay, so as an investor, I've got a long-term lease. I've got usually triple net, so I have no expenses or operating costs. So I just go to my mailbox for the next 15 years and get a check, hopefully.
Absolutely.
Okay. And obviously that's one reason this sector is so popular, right? And it's because of this relative safety and this long-term lease. Is that why it's so safe and so popular?
It offers stable cash flow, and investors can diversify. They can have their stock portfolio, but more and more investors want to diversify into something that's simple and easy, such as a single-tenant type of real estate investment. There is, as we said, there's very little to do. It's very secure, and you know what you're getting.
Right. And yes, you want real estate in your portfolio. If you don't have it in there, you should. Real estate's a good hedge against inflation.
Absolutely.
Well, you talked about the returns. What kind of cap rates are you seeing on single-tenant net lease properties, and what type of volume are you seeing in the marketplace?
The cap rates are hot right now. We trend this, and back in 2012, cap rates for the single-tenant sector that I study and watch were around 7.6% per year in 2012. We noticed a drop in cap rates in 2013 to about 7%, and then this past year in 2014 they're trending at 6.5%. So we're really seeing a decided decrease in cap rates, which is good for the investor because they're seeing increased value in their single-tenant property.
And you've seen the same thing in the volume of sales?
Yeah, the volume is also increasing, which we found to be excellent for our business. We like that. And in 2012, we saw the average volume about $465 million in, again, our property type and what we track nationally. In 2013, it increased again to about $685 million. And this year, in 2014, it's going to trend to well over $1 billion.
Wow. So that is a big increase.
It is. It is. Yeah.
Well, you talked about the cap rates, and you talked about the strength of the tenant. So one thing with single tenant net lease properties, if we're talking about credit tenants, you have franchise tenants, right? And then you have corporate tenants. Give us the brief definition of the differences there, and then, if you will, an example cap rate difference for that perceived risk of a franchise versus corporate.
A franchise tenant may be a single location tenant. The franchisee may operate an Arby's, for example, or they may be an Arby's franchisee that has 50 or 100
You're
franchise
making me hungry.
locations.
Could you use another? I love Arby's.
You want a tire? So they may have a few or a lot of locations. Obviously, the larger they are, as the investor, you're going to feel more confident that they have some critical mass. On the other hand, the corporate location is likely to be a corporate dollar store or something like that, who has a national S&P Standard & Poor's rating, very strong, so there's a corporate guarantee. So an investor may feel, I feel a little more comfortable with the corporate one. And it just really depends, because they're
And
very...
how does that impact my cap rate? And my,
Well,
my return?
it does, but there are very strong franchisees out there too, so I don't want to leave you with the impression to ignore them. But typically, the franchise cap rate, if I use a 6% franchisee cap rate for whatever that particular single tenant is, if it were a national tenant, corporate guaranteed, the cap rate may be instead of 6%, it might be 5.75% or 5.6%. So there's a slight improvement or decrease in the basis points because of the security of being a national tenant versus a franchisee.
Yeah, and that makes sense. If you perceive a little more risk, you want a little higher return. And the other thing that's great about single tenant net lease properties that you mentioned is these long leases. And so give us an example, if you will, Nancy, of a difference in cap rate or value from a tenant that has a 15-year lease and then maybe a property that we're buying or selling that has a 5-year lease.
Sure. And let's make an assumption in this scenario that it's a triple net situation. If I have 5 years left on a triple net lease, obviously something is going to happen in 5 years. Hopefully you'll renew, and hopefully if you don't renew, then something else will happen which will make me happy as the investor. So I have risk. And in that, if I'm looking at the same national credit tenant with 5 years remaining, let's make an example of, it might be a 7.5 to an 8 cap of value at this moment in time. However, if I had 15 years left on that same triple net tenant and all was the same, I might be looking at a 6.25% to a 6.5% cap rate because of the length of the term remaining.
Okay, so if I did that math right, it's about 150 basis points roughly.
Easily.
It could
or more. It could be even more.
It could be 200 basis
Sure.
points. So,
Sure, it could be.
Okay, difference for that term of the lease. So I guess it's real important. That's probably one of the most important things if you're buying or selling single tenant let lease properties is that initial term that's left and how long that term is, right?
Absolutely.
Nancy, you mentioned true triple net is what everyone really likes to have, but some properties are really double net, right? Can you give us the difference there?
Sure. In the double net, Michael, the landlord is going to take on a little more responsibility, hence the cap rate's going to be a little bit higher or their yield is going to be better. They may take on responsibility for roof and structure, maybe parking lot. They may be also asked to pay the taxes and the insurance and get reimbursed by the tenant rather. And in a true triple net, they are sitting back and they're doing nothing. The tenant pays the utilities, all the maintenance. They're responsible for all repairs, taxes and insurance directly. We connotate that instead of having a plunger, it's a lazy boy. So the landlord in a triple net is virtually doing nothing.
And what is the cap rate differences as an example that you might see on a triple net versus a double net?
Sure. A good example would be in the dollar store arena, which we do a lot of work in. One example of a double net having 10 years left on it, my cap rate on that might be an 8 or 7.75, 8 cap rate. If that were a new 15-year triple net, dollar store with a brand new lease, that cap rate might be 6.25% to 6.5%. So there is a big difference when the landlord takes on risk or responsibility in the double net. They're going to have a higher return for it.
Yeah, well, it looks like in some cases double net might be a better way to go, especially if you've got a newer building, right, where it's maybe got a brand new roof, the parking lot's new, so you might not have any repairs on that in the first 10 years or so, right? All right, we'll stay with us. We're going to have more on the future of cap rates. One of the things that could impact the single-tenant net lease market is interest rates climbing up. So we're going to look at interest rates and how that may impact the single-tenant net lease market and some other factors to help you make decisions when to buy and sell. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back.
The Commercial Real Estate Show is brought to you in part by Florida International University. With FIU's Fast Track system, you can earn your master's in real estate in just 10 months without interrupting your career. Visit FIUonline.com to learn more. That's FIUonline.com.
Welcome back. I'm Michael Bull, and this is the Commercial Real Estate Show. Thanks for being with us. Today we're talking about the single-tenant net lease investment market. My guest is Nancy Miller. She's Senior VP with the National Net Lease Investment Group with Bull Realty. And Nancy, before the break, we were talking about the future of what cap rates are going to do. And I know you don't have a crystal ball, but you really study this market every day. Everyone expects interest rates to climb during 2015. And so what might that do to cap rates and values in the single-tenant net lease market?
Well, I agree that I think interest rates will slowly climb, and I think we're all prepared to see cap rates also increase, but they'll lag behind maybe 6 months or so to catch up. But we're going to see an increase in cap rates translated to a decrease in price for the same asset based upon today.
So you're not expecting a one-for-one, right? So if interest rates went up a full percentage point, let's say between now and a year from now, do you expect cap rates to do the same or just climb a certain percentage? That's
a hard question. I think they will climb, and I think that the Fed's life is uncertain, but I don't know if it's going to be a 1-to-1 ratio or not. My crystal ball's not that good.
Well, we ask the tough questions here.
Yeah, you do.
Right? So, but you do expect cap rates to go up, so it will impact values. And it's interesting to hear you say that, because I think interest rates will impact the single-tenant net lease market more than any other sector, because in the single-tenant net lease market, you have some of the properties there that don't have annual escalations, especially look at the drugstore tenants and things. So you may have a 20-year lease with no escalations in value. Obviously, increase in interest rates is really going to impact a property like that. Whereas you have a multi-tenant property, you might have annual increases. Sure. And so that might not be as impacted, because as everybody thinks that rents are going to go up, demand's going to go up with what's going on in the economy and in real estate. So it's interesting to hear you say that. So then, putting two to two together, if interest rates are going to climb and everyone feels like they are, it's going to impact the values of single-tenant net lease properties. I guess it's a good time to consider selling some of those properties if you're an owner.
Right now is an optimal time to consider selling. Cap rates are at a near all-time low. So if you're thinking about it, don't wait a year, don't wait 3 years. Consider it now, based upon your situation and what your goals are. But it's a terrific time to consider it and decide what you want to do next. Yeah,
I mean, you wouldn't want to be looking at this 2 years from now and thinking about selling and have cap rates gone up 1.5% or something, really hurt your value. Nancy, what are some of the other factors that should impact a disposition timing for an owner that owns current single-tenant net lease properties?
Well, one thing is you just asked me that occurred to me, and I wanted to throw it in also, is that we're right now in such a short supply. So now is the time to consider optimizing. If you're looking at selling, consider that. Look at also your lease terms. How much how much term do you have remaining on your lease? If right now you have 5+ years on it, it's a better time to consider selling, because it's harder to sell when your lease term is shorter, and it's harder for the investor who may consider buying it to get financing if there is a shorter lease term. So I like to advise folks to consider selling when there is at least 7 or 8 years remaining on a lease term. It's optimal. And of course, as we just mentioned, cap rates are still low today. We anticipate them rising. So a year from now, your property is a year of time burnt off the lease, and it's a year later, what are interest rates doing? So now or never in some cases.
Yeah, that's a great time to consider it, and I think that's a good point you bring. If you've got a lease right now with 6 to 8 years left, might be a good time to consider selling it, because you're above that 5-year point and you have the low interest rates, high cap rates. Well, Nancy, let's say that I'm an investor out there. I like the single tenant net lease market. I like the mailbox money aspect, but I don't like 6% cap rates. What are some tips for me as an investor if I'm looking for a little bit of higher yield?
Well, there are a couple ways to go with that. One is that look at a double net, as we mentioned earlier, where there's a little bit more risk and a higher reward, where you as a landlord may have some level of responsibility for roof and structure. That may be one way to increase your yield or your cap rate return. Secondly, you also may want to consider a franchise or a local type of tenant who may be uncertain in the world of national credit tenantville, but there's still going to be a good return. And if it's someone or a brand that it might be in your town and you pass them all the time, they have a long history, consider that, because your return is going to be a lot higher.
And what about looking at properties that have a short lease term? I guess that's another way to get a higher yield, right?
Yeah, and some folks will consider that. By and large, most folks don't want to, but one of the strategies that many of our investors have done is they'll take a shorter lease term, they'll go back to the tenant, and they'll say, I would like to extend my lease term for 5 years or more. Will you do that? And frequently, you'll know a property is really good because the tenant will say, sure, let's do it. So that gives the investor a lot of comfort that they're buying a lower price, higher cap rate property, and the tenant likes the location long enough to give an early extension.
Okay. And what are some ways to gauge a risk of a tenant renewing or not? So let's say I'm looking at a property, it's got 3 years left, I can get a really high cap rate, but I don't really know if they're going to renew or not.
That's a terrific question. Many factors. One is, where's the competition related to where I am? Am I in the part of town that's growing or declining? Is the current property the prototype current size of that tenant, or is it smaller? If it's smaller and it looks like the tenant business is very robust, there may be a little risk that they're going to go buy another piece of land and build if they think that they have, with a newer, better, larger store, can improve sales and so forth. Another issue is access and visibility. If for some reason that location is behind something, then the tenant will say, can I be in a better location? Or if I can make a right turn in, but I can't make a left turn out, so I'm missing part of the traffic, especially with fast food, that's an issue too. Maybe they don't have a drive-through and they need one. So there are many factors that the tenant will consider about whether to renew and stay or not.
Okay, and we're almost out of time here, but how about a quick closing tip for our listeners?
Oh my gosh, how much time do you have? Well, in terms of sellers, just be monitoring your lease. Make sure you know what the time frames are. Look at interest rates. Look at the market today to really ask yourself a serious question. Keep it, sell now or not, given the marketplace, to maximize and so forth my return. Ask us about it as well.
How about as a buyer?
As a buyer, take a look at analyze what the market is doing, come to us or others in this industry and say, help me with these leases. What's the behind the scenes stuff that I don't really know? Let's peel the onion back because there's so many questions.
Yeah, that's a good point. I mean, as you're talking, you first start thinking that single tenant net lease doesn't have a lot of moving parts. That's the beauty of it. It's easy, but there's a lot of devil in the details. You got to review that lease and know the market. And so great. Well, Nancy, thanks for joining us
Thank
today.
you.
We appreciate
Thanks
you being
a lot.
on the show.
Enjoyed it. Thank you, Michael.
All right, well, stay tuned. We're going to have more on financing and get some common mishaps and mistakes that you don't want to make when you're buying single-tenant net lease properties and when you're financing them. I'm Michael Bull. This is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by Bull Realty Commercial Advisors, a great place to do business. Visit bullrealty.com. RealNex, a comprehensive and powerful suite of commercial real estate tools at an incredibly low price. Visit realnex.com. That's REALNEX. FIU, Florida International University. Earn your master's in real estate in as little as 10 months without interrupting your career. Visit FIUonline.com. Xceligent, the resource professionals use for commercial real estate information. Visit xceligent.com. That's XCELIGENT. Commercial Search, the source to market and source available properties for sale or lease. Visit commercialsearch.com. For more information on these great companies or for additional videos, podcasts, or articles, visit CREshow.com.